Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. No, I didn't forget what day it was. It's Tuesday today. I normally don't do a video on Tuesday, but I got fired up once again. Reading the Yahoo article got me all fired up. Let's start with the stock market real quick. All right, so the stock market today down a little bit. We were up, we were down, we were up, down. It's about an hour before closing, down about 100 on the Dow, about 100 on the NASDAQ. Okay, so here's the thing I want to mention on the stock market. We got the Fed coming out tomorrow, right? And they're going to give us that 75 basis point increase. Okay, so that's going to happen. And what direction will the market go? Well, nobody knows for sure, but usually the direction it goes, sometimes a mistake and it corrects the other way. But here's what I want to point out, that the market went from the oversold position and then we had that 15% rally in the month of October for the Dow, and now we're in an overbought situation. If you go look up the NYMO and the NAMO, you'll see that these are both in overbought positions. They're both up around 60 or above level. Now, when they're 60 and below, that's oversold. That's all I'm going to mention there. That could move either direction right off the bat, but I do think we'll get that pullback coming into the marketplace shortly, maybe tomorrow, maybe shortly after the Fed. Maybe we'll get an initial spike and then head down lower to retest the lows. That's all I want to go on the stock market. Let's go over to the real estate market. Now, why am I making a video today? Well, nobody wants to talk to me about this stuff. I read an article. It got me all fired up, got me excited, got me riled up. Anyways, the headline on Yahoo was bad news for home buyers. Home buyers, you got bad news. Well, if you're buying a home, I think that's bad news enough. But anyways, it says that the inventory is constrained, right? Inventory is constrained. There's no inventory, and it says that the homeowners are locked into their home. They're never going to sell it again because they have this 3% mortgage. All right, now we know that mortgages went from 3% to 7%, but this article is so far off base. It just really is. All right, so we went from 3% to 7%. Now, we talk about Billy Bob on the show a lot. Now, Billy Bob, he got out at the top. Now, in his neighborhood, it topped out at $1 million, right? And he top ticked it. He sold right at $1 million. Now, his neighborhood, it's already pulled back to 800,000. Now, do you think that Billy Bob, who had a 3% mortgage, is sitting there going, oh man, I'm so mad I sold that house. I had a 3% mortgage locked in. And now if I want to buy it back, I got to get a 7% mortgage. I'm telling you, Billy Bob right now is doing the happy dance. Billy Bob is excited that he got out because he's got his cash sitting on the sideline waiting to pounce back on this market when the time's right, and the time is not right yet. But there are reasons that people are not going to just this thing about inventory. Let's start with this thing about inventory. Inventory is constrained, they say. Well, I'm telling you, they're measuring inventory in a different way. All right, let's say before the pandemic, you had this much inventory, right? And now after the pandemic, you got about this much inventory. But you know why you have so much less inventory now than you did before the pandemic? Okay, well, they say you have so much less, but you really don't. Here's why. All right, people are measuring inventory wrong. Look it. If there's 10 houses for sale in your neighborhood, now before the pandemic, let's say there were 10 houses for sale. And let's say there's 10 houses for sale now. Now, before the pandemic, these houses were selling at an average rate of about one a month. So they had about a 10-month supply. Now, after the pandemic, these are selling at about a rate of one every 6 months. So what do you have? You have a 5-year supply of inventory. Before the pandemic, one a month, you had a 10-month supply. That 10-month supply has now become a 5-year supply. But it's the same number of houses, right? But the demand has fallen off a cliff. There is no shortage of inventory. If you want to go out and buy a house, you can go out and buy a house. There's plenty of them for sale. There's 2 for sale on my street alone. Come on over. You can buy them. Look it. All right, the price is still high, but when there's no buyers, this is going to shift. It's going to change, right? It's going to change. But people are measuring this inventory thing wrong. Now, okay, now granted, that was just an artificial example of a particular area. Now, I know in your area, everything sells in 3 days. They put it on the market, it's gone in 3 days. 3 days tops, right? Well, most areas are now taking 10 months. 10 months to sell a home. That's what the inventory level has grown to, because home sales are selling at a much slower pace. Now, in the new home market, it's at 12 months, maybe even a little over 12 months now, because they can't sell the homes because there's no buyer. There's over 12 months of inventory in the new home market, and the new home prices are going to start coming down. You see, they don't have this, let's call it this skin in the game where they think their house is better than everyone else's house. That's what I get with the mom and pop. When I go on a listing appointment, they'll give me 100 reasons that their house should sell more than Billy Bob's house because their house is so much better than Billy Bob's house. Let me tell you, in the new home market, they don't have that mentality. They have, get me out of these homes. I need the money back so that I can finance my current project and continue to build. So they will drop the price to whatever they have to get out of the homes. Now, so what do you have? Well, you got the mom and pops up here, and the new homes, you see the existing homes are here. The new homes were more expensive, but you see the new homes are the ones that are dropping. And the mom and pop, they're going, we're not going to sell for anything less than Billy Bob got. Well, that is just bad thinking. They're going to lose their butt. I'm telling you, they're going to get hurt. Mom and pop, put your house below the market so it will sell. Otherwise, you're just going to chase it down. They go, no, Mike, that's not true. If nobody in my neighborhood sells, we're still up at the $1 million that Billy Bob got. Well, how do you get your money? You can't sell. The market has moved down to 800,000. You cannot sell. Well, if nobody sells, we're still at $1 million. This is the thinking of the mom and pop seller. Now, you got the thinking of the new home builders, and they think much differently. They think, okay, it was $1 million, now it's 800,000. Let's put it on at 750, and maybe we get an offer. It's very different, very, very different. Now, okay, I'm telling you, so a lot of the inventory is going to come from new home builders. They're going to be dumping their inventory at bargain prices. All right, that's where a lot of the inventory is coming from. Now, where's the rest of the inventory going to be coming from? Now, keep in mind, we already got a 10-month supply of inventory in most cities. Now, in your area, we only have a 3-day supply. That's because that one house just sold like that. 3 days, but okay. So where's the inventory coming from? Look, there's approximate, I'm just going to do single-family homes, single-family residence, not condos, not apartments, nothing. Single-family homes in the United States, there's a little over 100 million. Let's call it 105 million. Now, out of those 105 million, 28 million of them are owned by investors. Now, some of these investors, they do have that, 30-year mortgage at 3%. But most of these investors, the corporate investors, they're financed with short-term money. And out of these 100 million homes, 28 million are owned by investors. Let's say 10% sell. You're going to throw 2.8 million homes onto the marketplace. What's that going to do to the price? It's going to drop it like a rock. We got 10 months of inventory. That would give us 10 years of inventory. This thing is shifting and shifting fast. Okay, that's where the main source of inventory is going to come from, investors dumping houses. Why are they dumping them? Why are the corporate people go, but Mike, it's different this time. Corporations are going to come in. They're going to buy them all. No, they're not. Look it. Corporations were buying houses when interest rates were at 0 or 1%. That's what they could go and get money from the Federal Reserve. And then they could go buy a house and they could make it a rental and they could get 4%. 4% on their money. That's all they were after, is a 4% return, because they couldn't get 4% anywhere else. You know where you can get 4% right now? Well, about 4.5%. Just buy a bond, and that bond is going to go over 5%. These corporations will not be bailing you out. These corporations will be, instead of buyers, they'll be dumping the homes on the marketplace. People don't understand it. Now, I know there's no investors in your area. It's all owned by mom and pop. I get that. But most areas are going to come crashing down when these investors start dumping just 10%. Just 10% of their inventory is going to wipe out a lot. It's going to send that price down, 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 down. Now, the other source is going to be foreclosures. Now, but Mike, there's no foreclosures in my area. The foreclosure market's just starting. Look, it's growing at like 300% a year, but it's coming from a small number because we haven't been able to foreclose on people for the last 2 to 3 years. They went on forbearance. Government said you can't kick them out. We have a pandemic. You can't foreclose. Look, that's just the way it's been the past 2 to 3 years. Now it's going through the court system, but the court systems are backed up. The recession hasn't even hit yet. When the recession hits, people are going to lose their jobs. What type of jobs? We talked about in the last video. White-collar jobs. People that own homes, they're not going to have a way to pay. They're either going to sell the property at a loss from what they just bought it at, or they're going to get foreclosed upon, or they're just going to hand the keys back to the bank. Now, the banks are already contacting real estate brokers like myself. They're contacting us. They're saying, hey, Mike, we got to take a lot of these properties back, and we want to get them on the market right away so we can get a price close to what Billy Bob got. Billy Bob got that million, but we can still maybe we can get 850, Mike. Can you help us out? That's what's happening right now. And it's just starting. I know it's just starting. First inning, but the foreclosures are coming. Look, people will tell you there's not going to be any foreclosures. And of course, in your area, I get that. No foreclosures in your area. I understand that, right? No one's going to get laid off in your area. Everybody's going to keep their job. Matter of fact, their wages are going to go up to meet the cost of inflation so they can afford to buy the food, the gas, the heat, the home. Home expenses are just skyrocketing. They're going to have that because they're going to have their job. But in a lot of areas, especially my area, oh my goodness, I live in Silicon Valley, the number of job and layoff announcement, mass layoffs, I'm telling you, it's going to be a disaster here. And it's going to flood over into your area. It's going to take some time. Of course, now don't you sell. You get those diamond hands. You hold on to your house. And if nobody sells on your block, it'll stay at $1 million. Well, that's also an opinion. This has just been my opinion. I didn't have anybody to talk to today. I'm so fortunate to have you guys. If you like this stuff, give me the thumbs up. Why not? I know it's Tuesday. I'll probably be back tomorrow and do another video because I love doing these. I do. Bye-bye now.